Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein with your metals report for this Thursday. And we're now on the 19th of July, 2018, right at 4 p.m. Central Daylight Time. The settlement prices are in. And as you can see, gold made another new low, I think, for the year. 1210.70. It came well off that low late in the day. Now, we did see President Trump do the things he's not supposed to do again. There's nothing new about that. But the president normally doesn't talk monetary policy and what the Fed is doing. He did. So today what he was doing is he basically talked the dollar off its highs. He said, you know, the dollar's high, the Fed's doing too much with the interest rates, blah, blah, blah. In other words, raising them. Maybe they shouldn't be raised. First of all, the president's not supposed to even do that. Second of all, you know, separation of branches, they don't report to him. The only way a president's supposed to influence the Fed is with his appointments, not once they're sitting. Got that? Very, very important. So he breaks the rules, whatever. So he took the dollar off its highs and broke most of the currencies off the lows. In the meantime, the metals, which were down because of the strong dollar, and while they closed this way, copper, as I was noticing, the last trades of the day were closer to 271, not down here, about a penny and a half higher. Gold was up around the 1225. So I'm going to look for this market to open a little higher just because that's where the last trades were. Now, we're still getting craziness going on in Brent crude and in our own. The Saudis have said, hey guys, we're not about to break the crude down dramatically. So the market, as it had been going up, because they said a couple of things. They said they're going to add more oil. Well, now they said maybe not that much oil. So it first took the market back to 73.80. Then it settled down, but still down on the day. Nat gas getting, I think, short covering more than anything else. But when we look at the gold market, here's what I'm showing you. This break right now, you're down $17 for the week, and this is the low. As I said, take a look. For certainly of the year, you're even through the November break low periods, of course, of last year, but you haven't gone down to where you were in 2017 to even lower levels. You can get down towards the 1100 level to get down there. As you look at this chart, the interesting part of it is you did have an outside day down. You did take out Wednesday's high and low. You didn't close under Wednesday's low, which is always something I look at. Could be a bit of a trap play there. Generally, when you get outside days, you want to see it clear everything. So what the market's done is it's kept this pattern, as you can see, of these peaks, lower highs, lower lows. A warning sign that the market is running out of momentum to the downside would be just by tomorrow, Friday, or Monday, taking out today's high of 1229.60. That could be a point where the bears got caught just at that point in the market, and you want to get a bit more of a rally. So we'll see if that, in fact, shows up. I am not a screaming bull, don't think that. But I can make an argument that if that occurred, maybe the market wants to get back to wherever the 18-day average of closes is. It's very difficult for anyone fundamentally to be bullish this market when you have a Fed that is still intent with from the sounds of it, 2 more interest rate hikes, with the economy going well. And I'll give you a scary thing. What if we make a deal on trade, be it with Mexico or Europe? I think, for whatever reason, I think the president's saving Canada. But you make a deal with one, it's going to be a domino impact. Do you think the president's going to go into the midterm elections with these tariff fights, or will it magically, he'll have won something so that he goes to the polls with that? You've got to put this in the back of your head. I'm not saying it's going to happen, but you got to think that. As a chartist, though, you take off the name of the chart, and all I'm looking at is today's high should not be taken out. What about downside? You're at it. You're at the Bollinger Bands. You're not coming out of sideways action. The sideways action was up here, so the market has spent itself. There are reasons to be concerned if you're short, and another reason is I want you to take a look with me at what's going on. You do see both numbers are under 20 today. Today is Thursday, and the stochastics have both under 20. Yesterday, both were under 20. The day before, they were under 20. You have 3 days in a row where they're under 20. Often, when you spring a trap with stochastics, a trap, the market will hang like it's doing. You close near the highs of the down day, the third day of it, and for whatever reason it pops higher, and you lose that embedded reading. It's just a warning sign. I'm not saying it's going to happen. And it also doesn't mean I'm right that the market's going to go back to the 18-day average. The pattern is one where it's not as bearish as I would have liked to have seen it. The gold ETF is actually a more bearish chart, but it's the same thing. I don't want to see today's high taken out. It's an outside day right down against the lower Bollinger Band. In GDX, you went right to that lower number. You take a look at this, 2148. The lower Bollinger Band was 2158. You finished the day, 2149. The Bollinger Band's 2149. The low was 48, and you finished the day at 58. That's what these are displaying. Markets hit its downside target. When it hit its upside target, you reverse the other way. A warning sign, that's all I'm going to tell you. You don't want to take out today's high in this market either on Friday or Monday. If you do, the odds favor you're going to challenge the 18 and the 100-day average of closes. Don't take it out. The trend is still down. Oversold, but still down. Gold-silver ratio, just sitting here at the 68 level. Again, it's not going for those highs, but what you would like to see, if you're going to make a bottom at any point, is the silver gain on the gold. Not doing it yet. Silver, now another day under the lower Bollinger Band. That's today. You were yesterday 1557, just over it. So it's only the first day under the lower Bollinger Band. What about stochastics? Well, they're both under 20 today. Yesterday they were both under 20. Day before, so you got your 3 days in a row, 4 days in a row. If you lose it, you'll know when the market pops back over, and when you lose it, you don't want to be short anymore. That's all. It's that simple. In the copper market, still, this is a fully embedded reading, still an outside day. I don't want to see today's high taken out. Outside days are important to me. They represent the change in the market, change of a thought process. There's a reason they're an outside day. And I don't want to see that high taken out. If it is, maybe you can get back to the 18-day average of closes. The one market that has fallen the hardest during this, I know you'd think it's gold. I think it's copper is the biggest drop we've had. Platinum down to the lower Bollinger Band, holding it in what? Oversold condition, outside day. You know, I'm going to tell you, that's what number you want to watch. You didn't have that in palladium. Palladium's just a collapse market. Bang. And it came out of sideways action. Remember we talk so often, if you see this happening in narrowing Bollinger Bands, be careful. When it goes, it can be a son of a gun, and it doesn't give you a lot of warning. Look what it did. Bang. But first of all, what was the bias the whole time? You were under the 18-day average of closes. Trend was down. Lower highs, lower lows. Dollar index got up to what number the past 2 days? The upper Bollinger Band, can't seem to get through it. Now, today is an outside day up, so it's the flip-flop. I don't want to see today's low taken out if you're going to keep the bulls in control. In looking at the market, you are overbought, sideways action against the upper Bollinger Band, you're into the resistance area. You put that all together, you try to figure out what to do with it, and I'm there to help you. In my research, and there's many parts to my research, I offer it in two ways, by the way. One is a commentary page only, period. No trade recommendations, you don't have to have the oral updates and so on. I'm giving you what I think's going on in the market, talking commodities to commodity people. And just the way I talk here, I throw a lot more ideas than I can in this video out there. I review market reports for you that are coming up in the morning. I'll review the ones that have come out in the morning for you in the afternoon. Now, let's assume you want the trade recommendations, my oral updates and everything. That's the version that has both the commentary and that. And let me tell you how that works. You start off in the morning at 8:30, I review 40 charts. I'm throwing out trade ideas unlike I do here. I can say buy here, sell there, because you need a password and user ID to get into it. Got it? That's the key. It's one of my subscriber things. Yes, I offer a free trial to that. Then it's all the normal writing, and then the oral commentary as well, and special updates throughout the day. So I think you'll find that I'm a trader talking to traders, and I'm a commentary and analyst person talking to you in a way you can afford it. My commentary only runs $240 a year, $20 a month. We even have a special 2-for-1 on one trial if you want, so you can get 2 months for basically the price of one. Either way, talk to my brokers, give them a call, go to our website. You'll find out more about that. You can always click up here, and that'll take you right to our homepage, and it explains a lot. And go under research, you'll see everything there. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.